Hey everybody, welcome back to the channel. We have Palantir Q2 earnings on August 7th, 2023, and because of that, it's like a Super Bowl for us Palantir investors, a pretty big deal. I wanted to go back into Q1 earnings, take a look at this presentation that most people have probably forgotten about, haven't gone through the deep dive of the numbers in a while, and basically discuss what are the numbers I liked and what are the numbers I expect to be even better in Q2 or worse in Q2. So I thought it was worth kind of going through it and discussing a little bit more what I want to see from the numbers, specifically each by each segment, and then talk about overall kind of how I expect Q2 to end up turning out. I'll probably go even deeper on a Q2 earnings preview video a little bit later, but for now, just wanted to go back into Q1, remind everybody what we had, and then go deeper on what we could expect. So the main highlights: second quarter of GAAP profitability, GAAP EPS of 0.01 cents. I don't expect the GAAP EPS to necessarily change. I do expect us to continue to become GAAP net income, GAAP profitable and have positive income. I think we got $17 million last year off of just treasury bills. We had 1.5 billion in T-bills, getting 3%, so we had about 17 million, and we had 4 million in net income from business operations. If that 4 million can hopefully turn into like 7, 8, 10 million, right? Get a little actually money from operations, from that's real profit. That'd be amazing, along with the treasury income. So hopefully we continue to become GAAP profitable. I don't think that's going to be a concern at all. Achieved GAAP operating profitability for the first time. That was a big deal. GAAP operating margin up 1%. Cash from operations, 187 million, 36% margin. Not going to see a massive change there in terms of the margin. Hopefully the number does go up. Adjusted free cash flow of 189 million. That should go up as well. 36% margin. Having a above 30% margin on your adjusted free cash flow is phenomenal. And so if Palantir can maintain that by being fiscally responsible and just making sure that their free cash flow margin is continuing to be higher and in that 30 to 40% range, that's amazing. We'll just see if they can continue to get those numbers going each quarter to quarter. Revenue grew 18% year over year to 525 million. We are expecting 528 to 532 million, which is like a 1% increase from last quarter. I think that's sandbagging. I think we're going to get closer to 550, 560. Hopefully, if I'm not wrong, then at least we're definitely going to meet around 528, 532, but we always beat on revenue. So if we can get closer to that 550 range, that would be awesome. I think we beat by 19 million last quarter in terms of revenue. U.S. revenue grew 23% year over year to 337 million. U.S. commercial revenue 26% year over year, 39% quarter over quarter to 107 million. U.S. customer count grew 50% year over year. So these are the two things that I think are going to matter the most. Obviously, U.S. commercial is what Alex Karp said is what's going to allow them to become GAAP profitable. We need to make sure U.S. commercial revenue growth is on track with this 26 to 30%, 39% quarter over quarter. If we could continue to put up another quarter over quarter of 40% gains, that'd be amazing. U.S. customer commercial count grew 50% year over year. The reason they didn't include quarter over quarter is because I believe it's declining quarter over quarter, but year over year it's growing. So if we could see a reacceleration in that commercial customer count growth in the United States, where Karp is saying they're getting the most amount of demand, then that would also be helpful as well. So let's get into some of the actual financials. Again, GAAP earnings, I believe we're going to become profitable as well. We're probably going to stay at that 1 cent. I don't think we're going to get 0.02 cents a share. If we do, it would be amazing, but likely going to be in that 1 cent. And again, we got to give Palantir credit. I remember Q2 2022 when we were losing 9 cents a share, then 6 cents a share, and then we became profitable. I mean, that's a big jump going from 6 cents a share to 1 cent a share, and then to get profitable from operations is also a big jump in Q1 2023. So I think that's going to continue, and that's going to lead us to eventually be in the S&P 500 by early 2024, because we will be GAAP profitable for 4 consecutive quarters. GAAP operating profitability, 4.1 million. We lost 17.8 million last quarter. We gained 4.1 million. That number should continue to go up. And if that number continues to go up, Wall Street is going to continue to like that Palantir, this company that they thought was bleeding money hand over fist, is now actually making money in their business. U.S. commercial revenue growth, 337 million, up 23% year over year. I expect this to increase. The reason I expect this to increase is because Alex Karp is saying we are getting 12 months worth of demand in 1 month, and primarily a lot of that demand is from commercial clients, and those commercial clients primarily are in the United States. They're not international. International growth is at like 10%. It's really not that good, to be honest. So U.S. business, up 20%. Year over year is not bad. If we can get that to maybe 25, 26%, that would be even amazing. So 337 million, it's not bad. The question is just, can we continue to do what we need to do to be able to get there? So if we were to, say, let's US revenue growth 337 times 0.25, that would put us at about 421 million in Q2 2023 in US revenue growth. So we'll see. I mean, if this is year over year, this isn't quarter over quarter, so it would be hard to imagine they pull off what they did year over year in one quarter, but that's kind of the explosive growth we are hoping for. I don't expect it to come in Q2. Hopefully it's in Q3, Q4, but this is the bull case for Palantir in terms of commercialized revenue. Now, again, to go from Q1 2022 to Q3 2023 and increase 20%, to do that in one quarter, it is unrealistic. I'm just kind of putting it out there that if that were to happen, you would see the markets react really nicely because that means the demand is just growing at an amazing level. Now, is that going to happen? No clue. Probably not. But if that were to happen, that would be really exciting. More likely than not, we see, 337 million. We see probably like 350, 360, something like that. That's more realistic. U.S. commercial revenue growth year over year, 26% revenue growth. U.S. governmental revenue growth, 22%. Quarter over quarter, from 107 million, if we can get that to, 120, 130 million, that would be really nice. 230 million on U.S. government revenue growth. We did get a bunch of contracts. We got $460 million from the U.S. Special Operations Command and $110 million from the U.S. Space Systems Command. If that number can get to like 250, 260, that would be pretty nice. So, I mean, if we can continue to just grow the way we need to be able to grow from U.S. commercial and U.S. government, that would also be really important. I think the thing that's going to grow more, in my opinion, is commercial. So this same 26 versus 22%, I think that's going to happen as well. Again, I'm taking Karp at his word that he's saying they're getting a ton of demand and most of that are from enterprises. Government growth should continue to do well simply in the respects of we are getting government deals and, government is a great moat for us, along with this whole Fed Start program that we've operated, which I'm assuming is basically governmental revenue. But for us to really be able to tackle what we need to do, I think U.S. commercial has got to just continue to grow. Government revenue growth, 20% year over year. So this is overall, not just U.S. This is the entire world. Commercial revenue growth, 15%. I was actually surprised last quarter that government revenue growth was higher year over year than commercial revenue growth. I kind of expect that to flip. I think commercial revenue growth might be a little bit higher going into Q2, again, just given what Karp has been saying about demand. And overall, if that is that is a good thing, right? Because as much as we want the government to grow, the real TAM, this $40 billion valuation that Palantir now has, it's got to come from commercial, right? We've got to be able to ramp up commercial spend. And I don't think it happens in Q2. I think it's Q3, Q4. I think Q2 customer count is what the biggest thing we should care about. But if we can do that, then that would be really good for commercial rev. So I expect these to flip, and hopefully they do. If they don't, it's not the worst thing in the world, but I do want to see more commercial revenue than governmental revenue because that's where our real TAM is. Total revenue growth, 18% year over year. So Q1 2022, we did 446 million. Q1 2023, 525. Average TTM revenue per top 20 customer has went up. This average TTM is really important because that means that you're actually helping your customers, right? If their revenue goes up and the correlation is their revenue is going up because they're using your software, that means the net dollar retention should increase and their revenue in general should increase for your top 20 customers. They should be doing well, which can be attributed back to you because your software is like the operating system for why they're doing well in the first place. Now, in terms of total revenue growth, again, I really think we're sandbagging this 18% year over year revenue growth. I think it's going to come in more around 24, 25%. Again, Palantir is a growth company. You can't be going to get less than 20% year over year to be given the premiums you're getting. So currently, I think we are overvalued. If this is the growth trajectory, I think this will change this quarter and hopefully we revise guidance. And if we don't, then that means Q3, hopefully we revise the guidance. So they're going to continue to sandbag until the end of the year, which I'm fine with. But I would want to see kind of the read between the lines to know like they're definitely sandbagging and the growth is going to continue. Again, I expect us to hopefully bring in 550 million. They said 538. They said 528, 532. We've got to get closer around 550 just to be on track to get to the high end, because then the next quarter is going to have to be 601 and then 650 in order for us to meet that 2.2 billion, which is the 18% revenue growth target they're talking about. So we've got to, increase a lot per quarter from their expectations to be able to get to that high end revenue. Okay, here's the big one. Customer count. So as you can see, TTM ended March 31st, 2022. We had 184 customers. Now we have 280. Our total, and that's the commercial customer count growth. Our total customer count grew 41% year over year. So from 277, March 31st, 2022 to 391. Now, as you can see, the rate at which it's growing is declining. It went from 10 to 11 to 9 to 7. So the rate of growth is definitely down. But what matters is the overall customer count growth. I mean, this 391, you could argue, should probably be around 430, 440 by next quarter. I mean, just we do 391 minus 367. That's what, 24? So if you just add 391, if it's unchanged, we should have 415. if you give it a little bit of a boost, you would argue it's like maybe 425, 430, something like that. This is the most important thing in the world to me, because if revenue doesn't come in the way we expected, or it doesn't beat massively, but let's say commercial or total customer count is up like, 391 to 500 or 391 to 450 or 480. The market and the high frequency trading algorithms might not understand why that matters, but as a shareholder, you will, because you understand land, expand, scale. Give them the software, let them use it. You don't monetize for 12 to 18 months, and then you turn them into a client because the software is just that good. If we could do that, meaning we get 40, 50 customers, but it doesn't look like we got 40, 50 customers from the revenue side, that's still going to be really important because we know that revenue is coming, because then it's just a question of them being able to close the deal, and given the software is that good, we know we can close the deal. So customer count, commercial, and total customer count is something I'm really, really looking into. This is going to be the big thing, right? So our commercial customer count grew 20, and our total customer count grew 24. So that means that we only had 4 other new government customers that weren't commercial customers. So the commercial customers are really what's going to determine the trajectory of how much we're growing on the customer count side, based on how we're growing in commercial, and most of that is going to be U.S. commercial as well. Okay, total contract revenue. This went up from 248 million to 397 million. This is really, really good. That means the TCV, the value of the total contracts, meaning we don't recognize that value completely, but we have the potential to recognize that value, is up 60%. I mean, that is phenomenal. That means every contract we're closing is in the range of having that much more value over the lifetime of that contract, whether it's 5 years, 6 years, 10 years, 4 years, 2 years, versus being 60% lower, which is amazing. That means these deals are becoming more frothier and more intense and more stickier, and ultimately we're going to be able to generate more revenue from them. Billings also is up 25%. So our ability to be able to bill clients is going higher from 490 million to 614 million. I expect these to continue to grow. AIP is a platform, if they're continuing to sell it, which is something that is likely going to cost more money to the client over the long term, even if it's structured in 4 or 5 years, which means the TCV and the billings should increase as a result of us being able to penetrate more deeply into an organization and really get some big, big deals signed, right? This is not just software that you're paying for as you go. I'm assuming AIP is a little bit more intense. Eventually is pay as you go, but the initial kind of big, big contracts we're getting, that should include our TCV and billings to go a lot higher than they are right now. Q1 2023, we closed 64 deals of at least 1 million, 22 were at least 5 million, 8 were as 10 million. So that means 30 deals were between 30 deals were between 5 and 10 million. And so if you 64 minus 30 is 34, then you got 34 new deals, which are probably above 10 million. So if that's the case, then I would hope, this number goes to 70, maybe 75, just more deals. And hopefully those deals, I would want to see a little bit more that's in the SMBs, right? If 22 at least 5 million, can you give us 27 that were 5 million? Can you give us 10 that were at 10 million? Because attacking these down sector companies just means it opens up our ability to eventually go super mainstream and modularize our product in the downstream. Will that happen? I have no idea. How will that affect revenue? Not really sure, because that's technically not the best thing for revenue. It's more better for the trajectory of the company growing long term, because we're attacking SMBs. But I expect this number to hopefully be more than 64 and us to be able to get a little bit more money from that. Adjusted gross margin, 81%. This is probably not going to change. 81 to 80. Again, this is when we actually get all of our finances in order, which is probably going to take a couple of years, and we are really, getting the benefit of this 80% gross margins. It's going to be amazing. Right now, that's not happening because we have all these capital expenditures, operating expenses, etc. So we don't get 81% of every dollar, but one day we could, right? And that would be really valuable to the business. Q1 2023 ended with 2.9 billion in cash equivalents, and U.S. Treasury securities, and no debt. This I expect to continue to remain the same. Palantir is not doing anything with his money other than getting interest off of it, which is fair. I guess the question is, are they going to do something with this 2.9 billion? And maybe they do, maybe they don't. But for now, it seems like they're, just baking in money from treasuries, which is fine. It's going to continue to add to our bottom line, which is important. But eventually, we're going to have to do something with this cash, and not sure exactly what we're doing with the cash. Cash from operations and adjusted free cash flow. So we had 35 million in Q1 2022. 187 million Q1 2023. Obviously, that went up massively because the business has grown. Adjusted free cash flow also up massively, so I expect those numbers to continue to grow as well, and the margins on those are above 30%, which is amazing. Q1 2023 adjusted operating income was 125, representing a margin of 24%. So this is the actual profit margins. We're getting 80% gross on the software, but then you take all the expenses, we're at 24%. This number's got to increase over time. I think it was at 27% a couple of, 26% in Q1 2022. So, I mean, if we can get this back to like 27, 28%, I did a DCF a long time ago. If this adjusted operating income margin was like 35% over the next like 10 years, Palantir is a really good a pathway for it. But to get to 35% just means you have to be more fiscally disciplined, and you've got to grow a lot more. I mean, to be honest, you just got to grow a lot more. So if we can see this number come up as well, that would be really, really good for Palantir to be able to get them there. Okay, finally, their guidance. Q2 2023, revenue of 528 to 532. Again, I think they're sandbagging this. I think it's going to be more than that. Adjusted income from operations of 118 to 122. This would be sandbagged as well if the revenue is sandbagged. GAAP net income, we expect that to happen. For a full year, again, this larger target, 2.2535 billion, they've got to be able to increase the revenue on this 520 to 532. There's no way you could just bring in 528 because then the next quarter is going to have to be really good. And which actually is not the worst thing in the context of expectations on the stock price. If this revenue comes in flat and the next revenue, the next quarter, they blow it out the water. But there's no way they're hitting the high end of this target unless they get there. So we got to be able to do that. Adjusted income from operations of between 506 to 556 million. Again, to be able to get that, we've got to increase this number. GAAP net income in each quarter. I think the biggest thing for them this year is simply to be able to get GAAP net income in each quarter, right? To get GAAP profitability, because that shows their progression as a business and their path towards the S&P 500, which is a really big deal because a lot of institutional investors are going to have to start buying some Palantir, which would be good for the stock. But if they can show revenue growth and higher than 18% and customer count growth higher than 20 customers a quarter, and then get GAAP net profitable, those three things together is going to make this a really good year for Palantir. I don't know if it happens in Q2. In fact, I think it probably doesn't. Q3, Q4 is where we really see the growth from there. But if Q2 we can see we're on the trajectory to get there, then I think that'll be a good thing for Palantir long term. So those are my thoughts. Let me know your expectations going into Q2. What numbers, what specific numbers from Q1 do you want to see that are changed in Q2? And we'll talk about it in the comments. Thank you guys so much for listening and watching. I'll see you in the next one.